Every great investment begins with one question: what changes next? Recently, I sat down with Brian Balthazar, a longtime television executive and entertainment journalist who has spent decades interviewing some of Hollywood's biggest stars while watching one of the world's most influential industries evolve from the inside. We talked about streaming, AI, live sports, and entertainment business that appears to be reinventing itself almost overnight. Welcome to The Market Knowledge. I'm Lyndsay Malchuk. Now, for most investors, Hollywood isn't usually part of the conversation. Capital tends to flow towards sectors like technology, AI, energy, mining, healthcare, or even financial services. Entertainment is often viewed as just another consumer discretionary sector. That may be a mistake, though, because beneath the red carpets, blockbuster films, and celebrity headlines, Hollywood has quietly become one of the clearest real-time case studies in what happens when technology changes consumer behavior faster than businesses can adapt. And for investors, that's where the opportunity begins, because major shifts in consumer behavior almost always force major shifts in capital allocation. Now imagine this. You're sitting in the boardroom of one of North America's largest media companies. 20 years ago, you knew exactly who your competitors were and how your business created value. Today, you're competing with streaming platforms, social media, YouTube, gaming, podcasts, AI, and every notification competing for consumers' attention. Now, suddenly, the question isn't whether your next television series becomes successful, it's whether the business model that built your company still works. And when management teams begin asking those questions, investors should start paying attention. That shift is already reshaping the industry. Let's look at this. Comcast has announced plans to separate major media assets into a standalone company as investors increasingly place different valuations on legacy television businesses and faster-growing digital operations. Now, at the same time, the proposed combination of Paramount Skydance and Warner Bros. Discovery would create one of the largest entertainment companies in history, combining iconic intellectual property, streaming platforms, production studios, and premium sports rights all under one roof. These aren't simply headline-grabbing transactions. They reflect billions of dollars being repositioned around a new reality. Owning content is no longer enough. Companies increasingly need scale, direct consumer relationships, they need globally recognized intellectual property and premium live experiences to remain competitive. That brings us to what may be the most valuable asset in the entertainment industry today. And that's not another movie franchise, that's not another streaming platform. It's live sports. At first, that might seem surprising. After all, we spent the better part of 2 decades moving towards a world where consumers can watch almost anything, anywhere. And at the same time, all of it is changing. Movies are available on demand. Entire television series can be watched over a weekend. Podcasts, they patiently wait in our playlists. Consumers have never had more choice or convenience. Ironically, that's exactly what has made live sports so valuable. Its value has never been limited to the game itself. It comes from millions of people choosing to experience the exact same moment together in real time. Miss the FIFA World Cup final, the Super Bowl, or Game 7 of the Stanley Cup final, and watching it hours later simply just isn't the same experience, because the value isn't just the outcome. The value is sharing the moment. The 2026 FIFA World Cup is reinforcing that actual reality. Stadium attendance has reached record levels across Canada, the US, and Mexico, while television and streaming audiences, they continue to set new benchmarks around the world. Investors should pay attention, because those audience numbers, they help explain why companies like Amazon, Netflix, Apple, Disney, Comcast all continue investing billions of dollars in premium sports rights. They're not simply acquiring sporting events, they're investing in assets capable of delivering premium advertising revenue, subscriber retention, pricing power, and one of the rarest commodities in today's economy: predictable, large-scale consumer engagement. That investment strategy also helps explain why AI has become such a defining issue inside the entertainment industry. Across most sectors, AI is being measured through the lens of productivity, efficiency, and lower operating costs. Investors naturally evaluate those improvements through earnings and margins and future cash flow. Now, entertainment is asking a very different question. If AI dramatically reduces the cost of creating content, what happens to the value of the content people cannot replace? And that's not simply a philosophical debate, it's a valuation question. The answer will influence how investors assess intellectual property, premium brands, live experiences, and media companies for years to come. So as technology makes content increasingly abundant, truly scarce assets become increasingly valuable, and markets have historically rewarded scarcity. So perhaps the lesson investors should take away from Hollywood is this. This isn't simply an industry trying to keep pace with change, it's one of the first industries showing us what happens when consumer behavior shifts, business models come under pressure, management teams begin reallocating capital, and entirely new competitive advantages begin to emerge. Investors spend enormous amounts of time studying earning reports, interest rates, inflation, and economic data. And they should. Those indicators help explain where markets have been. Consumer behavior often reveals where they're going. Hollywood isn't predicting the future here, it's responding to it before most industries have a choice. So, the next time you see a headline about Hollywood, flip your perspective. Is it just an entertainment story, or is it a capital market story wearing an entertainment hat? To watch or listen to the full conversation with Brian and I, head over to the links below. I think you'll be surprised just how similar these two topics are.